Welcome to AAP Series. My name's Amon Alapusapili. I'm a chartered accountant by profession. In this series, time and again, we'll refer to the typical accounting terminologies which form the accounting equation: debit and credit. So, a debit, in a nutshell, is a transfer of value from an account which will increase assets and expenses, and simultaneously it will either decrease liabilities or revenue. While a credit is a transfer of value from an account which has got the potential to increase liabilities, owner's equity, and revenue, and simultaneously has a potential to decrease assets and expenses. So take note of those terminologies. Time and again we'll refer to them because it's bread and butter for us accountants. But for today, we'd like to share insights on commonly known terminology, money laundering. Money laundering has evolved over time. In the early years, there used to be a practice, and this practice is still there up to date, where people go out there and print fake money. Sometimes we've heard it in churches where people have been told that they can receive money in their account. That in itself is not money laundering. That's conmanship. A typical definition of money laundering, if you look at the word money laundering, comes with two words. There is money and laundering. So we are all conversant with the word laundering. So basically, money laundering is simply washing money. So a typical accountant like myself, you expect us to define money laundering as a scheme where illicit funds, illicit money is laundered through various systems for it to appear legitimate. So there are various ways in which money will be laundered. The first being corruption. We've heard of government deals where money has been laundered for it to appear legit. A typical example would be information from social media platforms, like the most recent scandal where $11 million was withdrawn somewhere. Another example of money laundering would be fraud. Usually fraud can happen either in government or private sector. Again, a typical example would be banks which have succumbed to a popularly known terminology called phishing, where someone uses IT knowledge to defraud the bank of huge sums of money. But once this money is obtained, the perpetrators of this fraud will find a way to clean the money for it to appear legitimate. We also have drug schemes where huge sums of monies are washed through drugs and ultimately the money appears legit. You have mineral schemes. A few months ago, I think we heard of a story where money was, we had a gold scam at one of our international airports. So money laundering is a big thing, and it has crippled society today in ways which we can't imagine. But at the core of it, it's simply a systematic way in which illicit monies are obtained and cleaned. Now, once this money has been obtained, the perpetrators have to wash it through 3 stages, and the first stage being placement. So once the money is obtained, it undergoes a process called placement. So in the next episode, we'll share more insights on what is involved with placement. Thank you for watching this video.